It's going back up the chain. You know, I mentioned that, you know, Neiman's and Saks and some of the other high-end retailers have, you know, are canceling orders and downsizing, et cetera. Consumer products companies, you know, we've seen a couple of things going on, at least in my opinion, in the past few years. First of all, in the mid-range, across a variety of different kinds of things, there are a lot of dead brands. They don't know that they were dead. They were dead 10 years ago. They've passed through probably 2 or 3 sets of private equity hands, and they're still dead. Unfortunately, during that period of time, each time they've had more debt layered on them. Those consumer products companies will fail. It will be very similar to retail in that if you're not in your segment one of the top 1 or 2 choices, you're going to have pretty rough sledding going forward. And so the people that are going to get, you know, pushed off the shelf are that 3rd or 4th choice in the same environment. And that's going to ripple all the way through, you know, cosmetics, you know, health and beauty, all of that stuff, as well as, you know, the more durable products, appliances, et cetera, during this period of time. And again, survival is going to be all about liquidity and leverage. You know, if you're able to come up with the liquidity to survive the piece of this that will be cyclical as opposed to secular, you know, then you'll be able to get out to the other end, the people that have not been able to deal with the liquidity issues and who are very highly leveraged. You know, somebody else is going to end up owning it, and, you know, the people who are going to make money in this environment are going to be the auctioneers and the liquidators. Although, frankly, they say they're having trouble moving stuff because there aren't a lot of buyers out there. So, you know, it looks a lot, to me at least, like the 80s. I mean, Ron, you were in this business in the 80s. Doesn't it look to you like the 80s, Ed?
Yeah, I mean
Mike, of course, is much younger, so yeah.
Actually, I'm not. I was in the I worked at Continental Airlines in the 80s. I lived it at the bankrupt Continental Airline.
But also, I think it's much more than just the economic effects here. I mean, if you want to look at the bigger picture, it's going to have massive geopolitical effects around the world. I mean, China reported yesterday GDP for the 4th quarter only grew at 6.8%, which is about 2/3 of what had been expected. I mean, if China's growth rate continues to go down and, you know, it's low single digits, it's flat, even potentially turn negative as a result of us not ordering product, which is what's happening, you're going to have tremendous social issues throughout the Asian continent. And I think what you're seeing now is really just the beginning of the taste. I mean, we're
And don't you think that's a high probability that's going to happen?
It's a certainty. I mean, the statistics were stunning. The U.S. has 4.5% of the world's population, and consumers in the U.S. in 2006 spent $10 trillion. If you look at, for example, Asia, China and India put together have 40% of the world's consumers and spent $3 trillion compared to our 10. I mean, we are the engine of the consumer world, and with what we're looking at is happening in our income and our wealth effect, the orders overseas are going to dry up, and we're just beginning to see that, and it's going to have some profound effects.
Ed, any further thoughts?
I'm so depressed.
That's because of the gambling last night, not this.
Now, where are your clients going to make money then? You know, it's sort of on the margin play, you know, the little, you know, buy something at 5 cents?
Well, look, I think so many of my clients have to work out of their current situations and hope that they don't get strangled on the way out. I don't know that there are very many people that think that they've seen the bottom such that the buying opportunities are there and the real money-making opportunities are there. And you know, there are people obviously hoarding cash. There are private equity firms that are starting to focus on distress for the first time ever. And you know, the real smart guys will make money. But exactly where and in what sectors and how they're going to go about doing it, don't know.
A little early to tell as we sit here in January.